Welcome to a new episode of the Opening Bid Unfiltered podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this podcast will make you a smarter investor, period. And you're going to get smarter on logistics with a heavy dose of technology on this episode. I have Dave Bozeman, CEO of C.H. Robinson, in the house. Dave, good to finally meet you. We have never talked before, but I am a longtime follower of your work. Your stock is on fire. Thank you for joining us today. So for those not familiar with your company, I believe it started, at 1905 as a produce, basically as a produce connector or provider or connections. Wow, what a transformation, what a journey.
Yeah, no, thanks, Brian. Hey, thanks for having me here. It's an honor. You do great work on this show. Yeah, C.H. Robinson has been around 120 years. As you can say, we're really proud about that. Two things that the audience might not know is the Robinson is actually the creator of the 3PL market, which we'll talk about, I'm sure, in this discussion, as well as the 4PL market. So we've been around, and certainly our roots are in produce, and it's come to the point where, in a sense, we move the goods that move the world, right, around the world, and we really touch a lot of lives and move the economy. So. We're here. We're happy for it. We like where we are in New Robinson, and I'm excited to talk about it.
I don't get to talk to a lot of leaders, Dave, that are overseeing a business with this type of storied history. Look, we're going to get into the business of where it is today and where it's going, but how do you explain a business being around since 1905?
Well, first of all, I have experience with businesses like that, with my background in some of those companies in Harley and Caterpillar and companies like that. So it's just been one of those resilient companies. And I see that in our employees, in our customers, in the work that we do. And it's really an honor and a privilege to be CEO of this storied company. And more exciting, Brian, if you come in here in Eden Prairie, 120-year company, you wouldn't feel that, right? It feels like we're a startup. That's how it should feel. And the next 120 years are going to be more exciting than the last 120 years. I can guarantee you that.
I'm sure. How have you, or I should say, why have you gravitated towards these heavy industrial business? I mean, Caterpillar, I think Caterpillar, these giant dump trucks. I think Harley Davidson. I mean, of course, iconic industrial company. And, I even think of C.H. Robinson. I mean, an industrial-minded company.
Well, I'm a Midwest guy by background. Born and raised in Chicago. I'm from the south side of Chicago. Have always been had this kind of Midwestern flair with the companies that you spoke about. And I like those companies. One, these type of companies focus in on customers. They focus in on employees. They focus in on doing the right thing and driving engineering. So those are the type of things that always attracted me. Now, obviously, getting experience with Amazon, getting that experience with technology at scale, that made something special. Bringing the industrials together with technology, and now bringing that all together at Robinson, that is something special and something I love to share in my experience.
I left out Amazon. I left out Ford as well. But CH, for those not familiar with the company, I think, of course, FedEx, UPS, they own trucks, they do this, they fly. That's not necessarily your business, right?
No, we're considered asset light. Those would be asset companies. We're asset light. And so essentially think about it as a two-sided marketplace. You have shippers or customers. They want to move their goods from one origin to a destination. On the other side of it, you have capacity. These are our carriers that will go and move those products. We sit in the middle, and what we do is we broker that agreement. And it's an advantage for our customers or our shippers. They get access to the largest set of carriers out there and gives them advantages on price and service. And for our carriers, they get advantage of a lot of freight access to them. And so we make that happen, and we've been doing that for several years. Now we're just doing it better, and I'm super excited about to tell you about some of the things we've got going on.
What is the biggest challenge a business like this is up against in this environment?
Well, the biggest challenge would be this. We've been going on about a 4 year freight recession, and coming out of the pandemic, supply chains have become very much complex around the world. But there's really two things that would drive the market right now. It's demand, and then there's supply. And in the pandemic, there was the most amount of supply that was entered into the market. There was a lot of carrier capacity. On the other hand, as we came out, there was an oversupply of goods. You can remember some of those days with the backup at the ports and a number of things coming out of the pandemic. And supply chains have really been dislocated ever since then. And going on 4 years, the key thing that drives a freight market for us, Brian, it is super, super important. It's going to be manufacturing, retail, housing. Those are the things that really drive freight. And if you start thinking about those key things on the demand side, housing has been somewhat flat to down. Manufacturing, the same thing. It's been flat for the last 3 years or so. And then you have retail, which has been somewhat dislocated. So we need demand to really come back, and then supply will burn down, which we see happening, and that will start kind of this rebound in the market. But at Robinson, we say it doesn't matter. We build a system that wins at the low and will win at the high. And for that, I'm super proud about what this team is doing.
I I really enjoy reading up on your business, and I have followed the company for a while. I know we have never talked, but I always view your business as it's a forward-looking economic indicator. I look at your business, I look at the railroads I talk to, even the trucking industry. I mean, has demand come back? What's your read on the economy?
Well, when I think about demand, I couldn't look at you right now and say there's any green shoots really on demand. There are some macro things that we're watching with interest rates changing on housing. Certainly, that could be a shot in the arm for that industry. But the thing you have to watch out for is with interest rates going down, it still becomes an affordability issue, and time will play out on whether housing really starts to rebound. We hope so. Manufacturing, as you can see, same thing. It's been flat, and I got to tell you, until there's really agreements on certain trade agreements, you really need China, India, Mexico, Canada. We deal with 83,000 customers, and we have 450,000 carriers. We do, 37 million shipments annually. So we have a really good look at the entire market. And our customer base right now, what they see is they're just not going to be all in and committal until they have some assurances and some certainties. And that's why some of these deals are so important. And so we see the demand side a bit cautious and really just not all in. On the carrier capacity side, that's burning down. We think in the next year, in 26, we'll see that getting down to some level of normality. And you're actually starting to see some of that cost pressure happening now. Some of that's seasonal as we're into kind of peak seasons. And so you always see costs going up on the capacity side. But we also see carriers coming out of the system as well. And so I think in the next year or so, that'll get back to a normality. What I cannot predict is really on demand, because there are some macros and global impacts that really drive those macros in the demand side.
How severe has the impact been to your industry from this trade war? I mean, things from my vantage point seem to have stabilized. I talked to a lot of retail CEOs. They have moved their supply chains. They seem to be more stable. Have you seen that stability at all?
Yeah, I've seen some stability, but this has been somewhat of a volatile year. If I'll take you back to April. Yeah, that was a really volatile time. As a matter of fact, if you think about the ports of Long Beach and Los Angeles, which are a key conduit of goods coming into the country, that would have been the lowest amount of goods coming into the country in decades. But fast forward, in July, we had the most amount of goods that ever came into the country through those same ports in 100 years. And that's because you see a dislocation. You're seeing customers move things in early. You're seeing customers change origins and destinations. What they're doing is trying to navigate the potential impacts of tariffs, tariffs on certain countries, tariffs on from a timing perspective. That puts us right front and center because that's what we do. We handle over 1.5 million customs transactions. We move goods from China to North Carolina every day, and not everyone can do that. And there's just a call on quality, and so customers really want someone who knows what they're doing on that. And so I've seen this kind of dislocation, somewhat stability, but it will not be complete until you have assurances on some of these trade deals. And I hope that happens because I'm all about global trade.
All right, stay with us, Dave. We're going to go off for a very short break. We'll be right back on Opening Bid Unfiltered. All right, welcome back to Opening Bid Unfiltered. Having a great chat with Dave Bozeman, the CEO of C.H. Robinson. Dave, I want to go into what you're working on with AI, but I want to go back to what you mentioned on April. I think it was a J.P. Morgan report that I read. They coined you one of their best CEOs in the logistics industry. When that news on tariffs hit in April, what did you do as a top leader in this space? That week of Liberation Day, what did you tell your teams, and then how did you operate through that?
Well, for me, I always say that the best leadership decisions are made with a clear head. And there's a time to be smart, and there's a lot of smart people in the world and in this industry. But I think you have to be wise. And I really just coach my team on being wise, understanding your customer, projecting yourself, putting your customer in your customer's shoes, because there's a lot of emotion that can happen when things are happening around changes of economic impact. So really have that empathy, really understand your customers and go deep, but keep a clear head, be wise, and see what your customers are trying to solve for. That's how we kind of guided through this kind of volatile period. What we also said is this: you can't wake up every day and then just react to things that are going to happen. What I've tried to lead through is to say volatility is our new norm. You have to build your systems to know that you're going to have volatility in them, and that should be now routine. And when you can look around corners, when you can think about that, we can build systems that have good instrumentation that really predict, then things won't be such a shock in the system. And that's just what we did. We have the best logisticians in the world. I can stand on that. And we just said, hey, we're going to do what we do best, and that's get customers through really difficult problems.
Please send me the bill for that leadership advice. I mean, you could. I'll send you my address here in New York City because that is some really good stuff, my friend. So on the manufacturing front, you brought up a very good point. We've seen really this year, it's been a lot of challenges, but a real focus on bringing manufacturing back to the U.S. How much of a long-term tailwind is that for a business like yours? I'm thinking if we're building data centers in this country, the workers on that site are going to need to eat, and maybe they're going to need some produce from a broker that helped put this all together, like C.H. Robinson.
Yeah, I mean, when you think about it, one of the things I love about this business, having so many customers, we get to see the entire global impact. And if you start talking about a policy of bringing manufacturing, say, back to the U.S., yeah, you could debate how realistic that is or not. I think for certain industries, it's a little bit more realistic. For a number of industries, possibly not, because these supply chains were really built over 3 decades, and we see that. Some of the shifts you might have is go from, say, China to Vietnam or India subcontinent, and we see customers doing that, doing a shift. But if we were to move things over, and we've seen some of that as well, some friend shoring, some near shoring, our business is resilient like that. For example, a number of things have been placed in Mexico, and that product has to go from Mexico into the U.S. Well, Robinson is right there. We're gonna touch that product. 1 in every 10 shipments that come from Mexico into the U.S., we touch that and we move that. And when you look at Canada, it's the same way. We move product from Canada into the U.S. And so the point here is this: things are always going to shift. And when they do, freight has to move one way or the other, Brian. It has to go from origin to destination. And no matter what, when it goes to origin to destination, be it global or be it domestic here in the US, Robinson's going to be in the middle of that. And one thing I will say, when you think about China, there's been some changes in China. We've diversified some of our movement in a trans-Pacific lane, but at the end of the day, that's somewhat the factory to the world. That's a big pipe, a big impact. We see that, and we're going to always touch that freight. But we're going to be resilient, and no matter what the policy changes, Robinson, you can be assured that Robinson's going to be front and center.
Dave, every single piece of research I read on your company, they mention productivity, they mention really large productivity gains, in part driven by AI. What are you doing internally to drive some of this productivity, and how is AI impacting your business?
Well, it's a great question, and love to talk about it. I'll put it in context here. We're doing a lot, but it's more than just productivity. I always start by saying there's three key things that we're driving in our transformation at Robinson. One, it's our people, our logisticians, best in the world. Two, it's our technology that you handed on. We feel like our technology is the best in the industry. But three is our secret sauce, and that's our operating model. And we have an operating model that we brought into the company that's based on lean principles, and we really call it lean AI. Think of it as lean being the engine and AI being the accelerator. And what we try to do is, in fact, we have driven productivity. But I want to put it in context. Since the end of 2022, we've driven 40+% productivity out of the system. And we measure that in shipments per person per day or fouls per person per month. We're an asset light company, and so there's a lot of variable costs. Most of our costs is in variable costs. And so we've seen a really good drive in productivity, and that's gone to the bottom line for sure. But when we look at it, there's no KPI in Robinson around headcount. I don't look at it that way. We look at it as about engineering the system. We have, Brian, what we call our order to cash process. And in this industry, that's a very physical process. It's a very manual process, a lot of handoffs, a lot of mundane tasks. That was ripe for our technology stack, our generative AI, large language models to go in and automate a lot of that order to cash process, things like quoting, which we could talk about. And by doing that, we're able to take 3 million, shipping tasks and automate those. But we're shifting that over to the right. Customer interaction is so important in this industry. So shifting our talents now to solve problems with customers, go deeper with their issues, that's the shift that we've had to have. Automating the mundane tasks is what we're taking out at Robinson.
Do you have a big bet or two for next year on the AI front? Like, where are you spending a large part of your tech budget?
Well, I could tell you right now, we're going to the advent of agentic AI, and we're doing that when a lot of companies are still trying to get their hands around driving the impact of generative AI. And I'll tell you why. We come from machine learning into generative AI and now agentic, but the cost would surprise you. I always say that we are the company that is getting this AI benefit because we're at the end of the bullwhip. If you think about it, the hyperscalers, and by the way, we use Azure. We're on the Azure platform as our hyperscaler. All of those models, we have the flexibility to use those models because at Robinson, we have domain expertise, 450 engineers that are building our system, and we get the opportunity to use all of the various models that come in. And now listen, our compute power is sophisticated. We're doing some good things, but we're not doing genealogy. And so we're able to use, say, a 2-3-year-old model and take advantage of that cost. And we use all of them. And so we benefit. What's the end result? The end result is we've had a 10x usage in our models with a 25 to 30% reduction in cost, believe it or not. And we see that will actually continue as the competition of cost comes in these models and our usage throughout. And because we have domain expertise, it's internal engineers building bespoke applications for our internal technology. So, we are the company that's benefited from that. And that's why I always go on record in saying that.
At the end of each show, Dave, we always love to get a hot take from a guest, and I hope I have this nugget correct, that you are a fan of Japanese manufacturing techniques. Why? Where did that come from? And what are they doing right that we're still not doing right?
Oh boy, that's a history. Well, first of all, I would have to get credit where credit is due, and that really goes to actually one of my employers. You go way back to Ford Motor Company, which was the father, technically, of lean manufacturing. The Japanese certainly took on that concept and drove some perfection in it. And I like to coin myself as a lean practitioner, really driving and looking at lean way back in my early pup days in Harley Davidson. And why do we do it? Lean is about continuous improvement, every person, every day. And as a CEO coming here, it was a little strange, Brian. I mean, going to what I call go to Gemba. That means go to the work. And seeing a CEO sit at the desk for 2 hours and just observe and ask questions was a bit strange for people, but you know what? They love it. It was, but they love it. And I learned so much, and I actually require my team to do it. It has been a game changer for this company. And actually, I think it's one of the moats and the separators that we have to our competition. We're driving lean plus technology plus our people. We think that's a deep, wide moat. And that's what you're seeing in what we think are our demonstrable benefits that we've seen in the last 7 quarters.
Dave, real quick, last one for you. Where do you go to for, the CEO job? It is a lonely world out there. Where do you go to for advice and help and guidance?
Well, obviously, I have friends that are other CEOs. I have friends that are just friends that I've grown up with, and just confidants that I can go and talk to on various fronts. If it's a business front, there are really smart people that I've come across in the world that I can just call, and sometimes you just want to get things off your chest and get an unconditional, unbiased reaction to that. I have those people that I can do that with. At the end of the day, it's my wife and my siblings. They know who you are, and they can be very straight with you. I always say, if you want some raw feedback, go to your siblings, go to your spouse, go to your partner, because they live what you see every day, and they'll give it to you straight.
Dave, I'm not a CEO, but I do know where you're coming from. Trust me, we'll take that offline. I may end up coming to you, Dave, for advice. I got to get
there you go. I got you.
All right, I appreciate
Don't worry
you.
about it.
All right, well, Dave, I wish you much luck and success on the road ahead. Dave Bozeman, CEO of C.H. Robinson. Looking forward to staying in touch. Appreciate it.
All right, thanks, Brian. Appreciate it.
All right, that's it for the latest episode of Opening Bid Unfiltered. Like I always say, continue to hit us with all that love on all the podcast platform. Love all the feedback on YouTube I've been getting recently. It makes me better at doing these interviews, so keep that feedback coming. I love to see it. We'll talk to you soon.